How does your money work when you invested with 14% per annum on Loanch in loans from Tambadana? I have the CEO Harold here, and today he's going to answer the investors' question we have for him. Harold, thank you very much for having me, first of all.
Thank you very much. Thank you for visiting Malaysia.
Yeah, happy to be here and look a little bit behind the scenes and find out how your business is working. And we are here in Malaysia, in Kuala Lumpur City. And first of all, can you introduce us your business and what you do here?
I'm the CEO of Tambadana. Right now, in terms of our company strength, we've got about 55 people and still growing. In terms of our loan portfolio, it's growing month on month, about 10% of new unique customers. So in terms of the viability and the business segment, is still remain, although we have our competitors, but it remains pretty much untapped. So yeah, it's a pretty exciting times, and we like to see it grow further.
Yeah. You are very, very quickly growing. In fact, the most recent numbers that you have published say that from January to December 2024, you grew from about $500,000 per month in new loan volume to $5.4 million per month in loan volume. So you scaled very fast, and it seems to be working. What is your take on the business development that you scaled 10x basically?
So in year 2024, we obtained our digital lending license in April 2024. We obtained the license, and that we have not achieved the exponential growth yet. At that point in time, we were still getting ready in terms of two main areas. First would be the digital marketing and how to do it better, to optimize it better. As also when we are receiving in the customers, we need to optimize our risk as well. So these were the two areas that we were working on from, I would say, April to about May, June. And from June onwards, that is where the exponential growth came in. I mean, at the current point of recording right now in early April, I would say we are close to almost doubling the said portfolio size.
So $10 million.
Close to $10 million. I think by this month we would have arrived at that figure.
Wow, it's quite a lot, huh?
Yep.
And
so yeah, that is the projection of the growth that we were experiencing.
Yeah. And the EBIT, so earnings before interest and taxes, is positive since the third quarter of 2024. But you're still a young company without a proven track record, for example, when it comes to handling defaults, which is one of the key aspects when lending out money. So why should investors trust you and trust their money with you?
So first of all, I would say this is all from top down, right? In terms of management of the company, we are quite strict. We have our monthly business reviews. So everyone knows exactly what everyone else is doing, even we're like far away. Secondly, treasury controls are pretty strict as well. Every expenses and every disbursement that has been made to the customer is all accounted for. And in terms of our talking about expenses, every single payment that goes out the company needs its approval before it's even paid out. Same as for the repayment back to Loanch, the approval is required. So in terms of management, treasury controls is very strong. Secondly, is how we manage our customers. So when we're doing our risk profiling, from when we started, the NPL was actually in the range of about 12%. At this current point in time, it's decreased all the way down to 6%. So we know that we're doing something correct. We know that we're doing something right, and that even gives us confidence that our models, our risk models are working well. So I think investors should be pretty, how do I put it, confident in the areas that we are working at, that we are working with, the customer segments that we are working with. They are usually of higher risk profile. But with this sort of NPL that we are looking, it's actually pretty healthy.
Great. And you have a heavy focus on the single payment loans, so 30-day loans, which is the standard. And you have a customer acquisition cost of about 4% of your monthly loan volume in last January and also in last December. Is that a number you're aiming for?
So when we talk about customer acquisition costs, it really depends on the campaigns that we are running to obtain new customers. For the month of December and January, it would be targeted toward the festive crowd. December it was for Christmas, and in January it was for Chinese New Year in Malaysia. We would amend and play around with the marketing costs as we go throughout the year, because in Malaysia, not only do people spend during festive season, but there are also school holidays period. If I remember correctly, it's about 4 times a year. There's a school holiday period, so we would adjust our spending campaigns, marketing campaigns accordingly to all this festive period and school holidays. I think the other way to look at it at a clearer picture is that our effective customer acquisition cost is about $20 per new customer, and in terms of revenue, the unit of economics usually improve when they take a second loan and after that and more, second loan and above.
If I can interrupt you there, how many people take a second loan?
So from what we observe, it's about 75 to 80% usually would retake a second loan.
And then the customer acquisition cost is much lower, I assume?
Yes, effectively almost very minimal, and our unit economics will improve from the second loan onwards. Yeah.
Okay, yeah, 80% coming again, that's quite good.
Yeah, about 75 to 80% coming back again.
Okay. Yeah. And if a customer is not paying you back in time, let's say it's 30 days past due, is that something you handle yourself or do you sell this claim?
So right now we do have our internal collection team. For loans that are above 30 days, but if we could still contact the customer, we will handle it within the internal team. Above 30 days, it's all placed out to collection agencies, whereby they would have more tools to collect from the customer that we do not have at the moment, mainly because of the Privacy Data Protection Act. So we place it out to a third-party collection agency to resolve all that on our behalf.
Okay. And how much do you pay these collection agencies if they're successful?
Right. So collection agency usually charges based on the aging of the loan, and seemingly that our loans, when we place it out to there, is considered quite young. So usually it ranges from about 2 to 3% based on success basis, and the most expensive would be in the range up to 20%, but this is when we're talking about the loan being aged more than 2 years and above. Right. So yeah, that's the kind of cost that we are looking at, the range of cost that we are looking at.
And that's let's say the extreme case, but what is your average return on loans given out to customers?
This part here we're talking about unit economics, right?
Yeah.
Okay, so approximately combination of both single payment loan and installment loan, it will be about 9%.
Of your revenue that you have.
Of the revenue, we're looking at about 19%, and after all the cost, provisions, etc., we're looking at 9% net profit.
Okay. So you have 2 types of loans: the single payment loan with 30 days usually, and the installment loan over 3 or 6 months, for example.
3 or 6 months,
So these are the loans you offer. Are there big differences in return you are getting from those?
No, the returns are pretty similar. I think the main approach is that who actually gets the installment loans. The installment loans are usually given to customers with better risk profile. So similarly, the installment loans are also giving in a higher quantum than the single payment loans. So yeah, that would be the main difference, and not too much on the revenue generating aspect of these loans.
Mm-hmm.
Yeah.
Mm-hmm. And are there any criteria a loan applicant has to fulfill when taking a loan from you?
So this is the area where we would compare ourselves to our competitors. That we do really well. There are only three main criteria that we require from the customer. First of all, to be of age, of an adult age, 18 years old and above. Secondly, would be that they will need their national ID card and a selfie. That's pretty much it. The rest of it is taken care on the back end in our risk modules. Yeah. So then after that, the loan is automatically calculated for whatever that they are able to get, and it's offered automatically as well.
Okay.
Yeah.
And what are some, or are there some no-go criteria in the end?
Sorry?
No-go criteria?
So no-go criteria, the main one would be if the individual is bankrupt, that would be the main no-go.
Mm-hmm.
Yeah, but other than that, we pretty much have no reject policy.
Okay.
Yeah, so it could be a customer that is very stretched out or have a very tarnished credit report. We will still offer a loan, although it will be the lowest offer.
Mm-hmm.
Yeah,
So
we'll still help them out, because otherwise they have nowhere else to go. So
Right.
this is where we step in and say, okay, we'll help you out with a smallest loan quantum. And
what would that be, for example?
that would be about that would be exactly 300 ringgit.
Okay.
Yeah,
So
about
it would be
50-60 euros thereabouts.
50-60 euro.
Yeah.
Okay.
Yeah.
And how is fraud prevented when you give out loans to everyone?
So this part here, we rely highly. There's a high dependency on our risk modules,
Mm-hmm.
which we have across the time. We started business in 2023. We started the business small, and we took very careful steps. And also, at that period point in time, we were collecting all the data that we could get. In fact, but even said so, our risk at that point was not that bad. So we collected a lot of data, and we run multiple simulation, and across time we have improved it to gain whatever results that we have today.
Mm-hmm.
And it's still being improved on a weekly basis.
Right.
Weekly basis. So there's still areas that we're trying out. We are breaking down the customer profile into granular. So as soon as we get it, we test it. So yeah, the back office that we have is pretty comprehensive. Mm-hmm. So we are able to do all of this of A/B testing and get the results that we have today.
Right, right. And what would you say, how many people try to defraud you in the end? Like, are there many people trying to take a loan and not paying it back?
Yeah, that would be for sure. I mean, in this line of business, that always happens. But we will still be able to find them to a certain extent. So the other things that we do is that we'll put them onto the local Malaysian credit bureau. Mm-hmm. There are two main ones. One is with Experian. The other one is with Citos. Citos, it's a Malaysian brand credit bureau, but it's pretty large. So what we do is that we will place the name of these defaulters in this credit bureau, and across time, when these defaulters would need another loan from another provider, they would have to clear our loan first. Mm-hmm. So it's a long game, but yeah. Seeing that our non-performing loans are pretty low, mm-hmm. so it's still very much manageable at the current point in time. And in fact, our recovery rate for this group of people is about 3% a month.
Okay.
Yeah.
Okay.
Well, for this group of non-performing loans that has been listed, it's about 3% a month. Mm-hmm. So we know that they're coming back, but unfortunately they can't take a loan with us anymore.
Yeah.
They will have to take it from someone else.
Okay, that's understood. And you're, of course, cooperating with Loanch to get some funding. How does it work from your point of view? Is it a good cooperation? How is it for you?
It's a good cooperation. I think that, again, from top down, the management is professional, communication is clear. The legal team that we have on both sides, I think, are pretty strong as well. So a lot of the areas are covered. The other area that we're talking in terms of communication is that we even for ourselves, we get reminders that this is a scheduled payment and we always pay it on time. So that smoothen things out a lot. Yeah, the communication part is absolute important. So yeah, for me, I really am really grateful for that communication being clear at all times. So. Yeah.
And your interest rate is about 14%, sometimes lower, sometimes a little higher.
Yeah.
What interest rate are you comfortable paying?
I think at this current point in time, we are mark to market and we offer very competitive rates. Also at the same time, it works well with our local business in Malaysia right here. So that would be the absolute optimum interest rate that we are giving at the moment. And still, I think if there are new investors coming in, there's cashback options. Yeah, based on the quantum that they are putting in with us. So yeah, I think it all works well.
Okay.
Yeah.
And is there a limit for how much you can pay investors?
A limit, we would have to revisit the financial model again, but it really depends. So what could happen is that if we have another product that is targeted towards a very much more higher risk profile of customers, then we could pay more, because riskier clients usually would mean high interest rates. So yeah, it depends on what the investor would like. Would they like a portfolio that is very high interest but majority of them are high risk? So yeah, that would be one option. But right now, we pool both of these products in a single interest program.
Yeah.
So yeah, this is the manageable ones. So if they want a higher return rate, it's possible, but it only means that it will be a higher risk group profile of customers.
Right.
Yeah.
And one thing many investors like very much, of course, is the buyback guarantee. That when a loan defaults, that you have the obligation to buy it back from them. How do you cover the buybacks?
So this is the part where I was mentioning earlier that we have very strong treasury controls. So the amount of money that we receive back from the customer usually is separated into 3 pools. The pools that is committed for Loanch, the second pool which is committed to paying our local expenses to our vendors, and the third one is to continue doing the business because we still need to do the disbursements. So in terms of the amounts that are accumulated in these pools is at every single time, even now, we are very sure that we are able to repay it back, and it's done in that priority. So yeah, that's part of our internal treasury control.
Okay, great, thank you very much. And now for the last question, for new investments, why should someone who's watching this video right now trust their money with you? What's your USP?
So first of all, I think, as well as I mentioned plenty of times, we are very well managed. We have controls all over in terms of treasury and our finance. And even in Malaysia, we follow strictly to the accounting rules, IFRS. We are audited, and if let's say the investor wants, we could even show you our annual report for this year. So it would give you a bit more confidence that we are really truly profit making. We've been paying our taxes, because if we don't pay our taxes, we're not profit making. Yeah, figures would speak for itself.
Great.
Yeah.
So I would say let's test your loan product and make a loan application.
Sure.
Okay. Thank you for your time.
Thank you very much.